Welcome to Entrepreneurship at Rowan, an official production of the award-winning Rowan Center for Innovation and Entrepreneurship. We cover the entrepreneurial pulse of Rowan students, faculty, and alumni, prepared to be Rowan proud.
Welcome to Season 2 of Entrepreneurship at Rowan. I'm your host, Joe Sokolowski. I want to know more about the flourishing entrepreneurial ecosystem in and around Rowan today. I'll be joined by a collection of professionals in the entrepreneurial investment space to hear their experience in the field and help you become a better entrepreneur. Today we have Benjamin Novak of Delaware Crossing Investor Group. Founded in 2005, DCIG is a network of roughly 30 members that offer capital and domain experience to new businesses. To date, they've invested in around 60 companies. Thanks for being with us today, Benjamin.
No, thank you so much for having me. Really stoked to speak with you and your listeners today.
Yeah, can't wait to hear more about the group. So I guess just to get right into it, could you tell us a little bit about the history of DCIG?
Sure. So we are an angel group, not an angel fund. So we're a collaboration of individual angel investors that find benefits in investing through a group, which we could talk about if you'd like. We were founded about 17 years ago. So if my math is right, that's 2005. There were a couple of partners at a law firm active in the space, Fox Rothschild, that got together to basically figure out how to support the entrepreneurial ecosystem in this mid-Atlantic region. And they basically were the ones that, soft-sponsored, silently sponsored this new angel group that we call Delaware Crossing Investor Group. I'll quickly mention that there's a lot of confusion about our name. So when I say Delaware Crossing Investor Group, a lot of people assume that we are based in Delaware. We are not. We cross the Delaware River between New Jersey and Pennsylvania each month, in that we meet in Bucks County in Princeton, New Jersey. So that's the background on the name. We are primarily investors based out of Pennsylvania and New Jersey, investing in companies in this region.
I love that background story there. It's so kind of straightforward, but it works perfectly with the name. I guess, could you kind of talk about, too, the different businesses that you guys look to invest in, or do you kind of go for anything, really?
So there's definitely certain types of companies that we invest in. And, in terms of tips to entrepreneurs trying to get investment, the first thing I would say is talk to the right people, meaning the type of people that invest in your type of company. And it's important to do that background. And fortunately, most investors only want to talk to the type of companies that they invest in. Yeah. So they tend to publicly announce very clearly on their websites the things that they invest in, the things they don't invest in. So they might have a geographical limitation or an industry limitation or a stage limitation. At Delaware Crossing, we have some of those limitations. So we're pretty tight in our geographic focus. So we invest in what we call mid-Atlantic-based companies.
Okay.
Define mid-Atlantic from Boston to D.C., Pittsburgh to the ocean. Little flexible in terms of what that includes, but it does not include things like Silicon Valley or Texas or Israel. There could be great companies there, but it's just outside of the geographic scope of where we invest. In terms of the industries that we invest in, we actually take a pretty wide approach in that we'll look at a range of industries. Statistically, you'll find that most of the companies we ultimately invest in tend to be either in the tech sector or the life science sector, especially if we use those terms pretty broadly. So I would say we mostly invest in tech and life science companies because they tend to support high growth companies. But we have looked at a range of deals, and we have invested in some outside of tech and life sciences. So we've done some beverage deals, some chemical deals, some other things that aren't your stereotypical New York-based tech startup company. So mid-Atlantic, a wide range of industries. And in terms of the stage, we tend to be primarily seed investors. That's a hard term to understand. It's an easy term to say and tough to understand because that means lots of different things to different people. But generally, when we're talking about seed stage, at least on the tech side, I tend to think of it as one or more products in market, and a fully fleshed team, one or more products in market, and some traction. So we don't tend to fund pre-seed stage, kind of idea stage companies, and we don't tend to come in first check for the later stage companies. So we might follow on. We generally are not one and done angels in that we might invest at the seed stage and say a Series C preferred stock security, but then we may follow on in an A, B, and a C. However, if it's a Series C stage company, that isn't a great fit for us for first check-in.
Just kind of out of curiosity, do a lot of your group members have experience in that tech and life science space, or it just, like you said, it just so happens to be a high growth industry?
I'll say yes and no. So yes, we, one way to increase your hit rate here and success as an angel investor is to invest in things that you know about.
Mm-hmm.
So part of the reason that we invest in tech and life science is because that's where a lot of our members have their backgrounds. So, we have, it's a pretty diverse membership. So in terms of background, we have kind of the professionals such as myself, like the partners at law firms. We have a lot of people in finance or accounting. We have cashed out entrepreneurs that have built up several companies of their own and sold them. We have people who are full-time professional investors. So they might run a family office or a venture capital fund by day and then angel invest on the side. So it's a pretty eclectic group of people with interesting backgrounds. And I would say, one of the things to think about when you're pitching an angel group is the key distinction between angel group and an angel fund is that an angel fund raises a pool of money and then has some subset that makes the investment decision. So there might be an individual or a selection committee that basically determines whether they make an investment or not and how much they invest or not. In an angel group, like Delaware Crossing Investor Group, we're 30 to 40, guys and gals that basically see the benefits of a group. So we'll fill the funnel together. We'll find companies that are interesting to look at. We'll pre-screen them together. We'll screen them together. We'll diligence them together. We'll manage those portfolio companies together. So there's lots of benefits to the group. However, because we're a group, not a fund, each individual angel gets to make their own personal investment decision deal by deal. So when a group pitches the full membership at DCIG, you might have 30 people that are interested in investing, or you might have 2. And sometimes we find that certain of our investors are very tech heavy, such as myself. I invest primarily in seed stage tech companies. Other investors, however, might be a physician that worked in pharma for their whole career and only invest in life science. And then you have a whole range of other people that might invest in miscellaneous things. Sometimes they have expertise and sometimes they defer to the expertise of other people in the group.
You just mentioned there that you kind of do a little bit of investing on your own. Could you maybe talk about that a little bit and how Rowan students could learn more about that?
Yeah, so I guess I wear lots of different hats in the startup ecosystem. So, the day job is I'm a partner at Morgan Lewis in our venture capital group, where I represent tech startups and investors in tech startups.
Okay.
I'm an active member of DCIG, Delaware Crossing Investor Group, where I serve on the screening committee, and I've led deal teams and diligence teams in multiple deals. And separate and apart from that, I have my own angel portfolio. I will say that a lot of my angel portfolio over time has overlapped with Delaware Crossing. So the type of companies that I invest in are pretty similar to the sweet spot for DCIG. My personal investment thesis is I invest in seed stage tech companies based on the East Coast. So seed stage meaning that, fully fleshed out teams, I'm looking generally for diversity in the management team, 1 or more products in market, and some significant amount of impressive traction. In terms of tech, I've done hardware deals, software deals, B2B, B2C, B2B2C, so a whole range of different tech deals, though most of my deals tend to be kind of in the B2B SaaS place. So that's, software companies that are selling their software to other companies. That's kind of my sweet spot. And once again, I invest in companies throughout the East Coast. So DCIG's Mid-Atlantic focus overlaps well. And check size and so forth also kind of overlaps well. So sometimes I'll find a lot of my deals through DCIG, or if I find a deal separately that I'm interested in investing in, assuming there's room for more investment, which there usually is, I'll often bring them into the DCIG circle, so they could be a Ben Novak deal as well as a DCIG deal.
Yeah, that's awesome. I think that's great to hear too, someone else's story of an individual angel, because I feel personally that it's so much harder to find those individuals, and especially reputable ones. So it's nice to hear kind of a story from someone like yourself about that. Could you go into a little more depth about what your screening process may look like for a prospective company?
Let me first say that as an angel group, we're not a fund and we don't have fund rules. So we have the flexibility to adjust our process kind of based on the deal and the company. And our timing often reflects the specific dynamics of the specific deal. But to talk about a stereotypical deal, I would say the first step in the process is what I'll call pre-screening. I guess before that, it's filling the funnel. So as members in an angel group, one of your roles, pretty much everybody in the group is charged with the responsibility of filling the funnel. So we're looking for promising companies. And to throw somebody in the funnel, you don't necessarily, as a member, need to vet them and confirm that they're going to be a wonderful investment opportunity. You just need to say, this is a person I've known for years, and they seem to have something interesting. Would you be interested in learning more? So we kind of fill the funnel, and the goal is to fill the funnel with a lot of companies that are roughly within our sweet spot. Then the first kind of screening process is what I'll call a pre-screen. That tends to involve one of the members of our screening committee. So I serve on the screening committee. The chairman of our screening committee is a gentleman named Mark Mitchell. Great guy, a lot of business finance experience. He was the CFO of Tyco for several, I think, decades. So he's the chair of our screening committee. So either he or myself or another member of the screening committee will often meet with these companies, might be at a 1 hour call to kind of understand it better. If we think it's one of the more promising ones in the funnel, it goes from pre-screening to screening. Okay. Every Friday, the full screening committee or most of the screening committee meets. So to do some rough math here, 52 weeks a year, meeting every Friday, we kind of have roughly 52 companies that we meet with that make it to that stage in the process. And from those companies that we meet with every Friday afternoon, we'll pick the two best of those companies to come to the general body meeting that we have once a month. So doing some quick math again, 12 months a year, one meeting a month, we look at about 24 companies that actually come to our meetings. And rough statistics, we tend to invest in about half of them. Okay. So in a year, we might make something like 12 investments. Sometimes there's more, sometimes there's less. These statistics also get a little confusing because we do a lot of follow-on investments. So, we might invest in 12 deals a year, but they might not be all 12 brand new portfolio companies. Some of them might be follow-on investments of our earlier portfolio companies. Okay.
Now, would you give any advice from where you are to any prospective companies or applicants looking to invest or get investment from you guys?
Yeah, what I would say is pitching an angel group is a learned skill set. So you could have a very promising company and be really good or really bad at pitching an angel group. You can have a very, company that's not very promising, and once again, have a really good chance of raising an angel round or not, largely based on how good you are at kind of this pitching process. So I would say there's certain things that are expected. There's lots of resources online about how to pitch your startup. I would say that the pitch should you should make sure that the pitch is customized to the group. So, and even a higher level than that, not just the pitch should be a good fit for the group, but your offering should be a good fit for the group. So the example I gave before, if you're raising on a simple agreement for future equity as safe, you're just not a good fit for DCIG because we don't invest in those types of securities. If you're talking to MABA, the Mid-Atlantic Bio Angels, and you're a tech company, might be a very promising tech company, but they don't invest in tech. They only invest in certain types of life science companies. So kind of the best way to increase your hit rate is to spend your limited resources, spend your time talking to the right investors and prospective investors. So that requires some research on the entrepreneur side. Once they find the type of angels that invest in companies of their type and their geography and their region, at their stage and so forth, then it's kind of learning that pitch process. Some people pick this up from online resources. Other people work with, maybe a presentation coach. Sometimes you might have lawyers or financial advisors or others on your team that have been through this process several times and can kind of help you hone your pitch. Through that iterative process, the hope is that you get something together that is presentable to an angel. One other thing I'll say is that if you plan to meet with a dozen different angel groups, don't meet first with the one that you think is the best for your company, because your first professional, angel group pitch is probably going to be your worst. You get better over time. You'll see that your presentation improves over time. You'll see that people tend to ask consistent questions over time. Mm-hmm. So a big tip here is just practice, practice, practice. And once again, before you go into that first angel pitch, hopefully you've practiced that pitch on friends and family and advisors before you first get in that room with the group of angels.
Sure. And I think we've all made that mistake once or twice of going for the best one first. So it's good to reinforce that. Let's say companies come to you guys and you guys like them, they like you, and you've made an investment. Could you talk about some of the things you guys offer other than that initial investment that may benefit them?
Absolutely. So we like to think of ourselves as value-added investors, meaning that we think the value that we add to our portfolio companies is in excess of the check. So we might write a $300,000 check. Somebody else could have written a $300,000 check. The reason we often think they should take our money instead of that alternative money is because of the value that we add. What that value is kind of ranges company by company, but it includes things like opening up our Rolodexes. So we will help you to the extent you're raising a Series A round. Lots of us are well connected in the VC ecosystem. We work with lots of Series A funds or Series B funds or other investors that might be interested in follow-on rounds. So we might open the door to a prospective investor for the next round. We help with other advisors, right? So to the extent you need a recommendation for a good law firm or accounting firm or something else, we help make those targeted intros to the right advisors. To the extent you need development help, there's a company in Philadelphia, ChopDog, that we do work with. We're happy to kind of connect our friends at ChopDog to our portfolio companies to help kind of fill the gaps. Often with early stage companies, one of the challenges is that you don't have the right team yet because you're growing from 0 employees to lots of employees. So you kind of need to fill in those experience gaps where possible. And also you often don't know what you don't know. So by bringing in an investor group like DCIG that's invested in 60 plus portfolio companies and talk to thousands of potential portfolio companies, there's some pattern recognition. We often can kind of read the tea leaves. We know what's going to happen next because we've seen the same thing happen over and over and over again. So by bringing that experience, we often could introduce you to the right partners, whether it's, legal, tech, investment or otherwise. Also, a lot of us have day jobs, right? So we're happy to introduce you to potential commercial partners. So it could be a key customer or a key supplier. To the extent you need a door open up at a big tech company, good chance that somebody in the group has a connection there. And carrying it right on through to the end of the life of the company, to the extent you're looking for a liquidity event and looking for somebody to buy you, often we help there. So to be honest, we don't offer every one of those things to every company that we work with. But often we provide the services that they ask for. So whether we're more active or less active, once again, depends on the company and the deal. But often it's really just how much the entrepreneurs lean on the angels. So I would highly recommend that for the entrepreneurs listening to this that do have investors or prospective investors, when you send out that monthly or quarterly investor update, don't just have the good and the bad, make sure that you have an ask. Because whenever I read an investor update from any of my portfolio companies, the one area that I really focus on is what do they need help with? Yeah,
really anyone or any group could give money. And I think those extra services that you guys offer really sets, whether it be a venture group or an angel group, it sets them apart and it really can make or break the company when they're growing. So I think the fact that you guys offer a kind of tailored experience to each company is awesome. Could you talk about anything that's exciting or new coming?
I think there's lots of exciting things in the future for DCIG. A lot of it is just a lot of the same. So when COVID hit, we kind of reevaluated our investment thesis and kind of talked as a group about, should we pull back from deploying capital? Should we deploy more capital? Should we deploy the same amount of capital? Should we expand our geographic focus now that everything's on Zoom? Ultimately, we decided to largely keep doing what we were doing, and we found success for that. Having a change in the markets like a worldwide pandemic changes lots of industries. And while it's really bad for lots of companies, it creates lots of opportunities for entrepreneurs to create new solutions to these new ever-evolving problems. So we found lots of great opportunities. We've deployed lots of capital over the past 2 years, and we're continuing to deploy capital in companies. In terms of other exciting things coming up, so I'm not sure if your members are familiar with the ACA, but there's a group called the Angel Capital Association, which is basically North America's largest trade group for the angel investing industry. And they have roughly 300 different angel groups and roughly 15,000 different angels that are members of this North American-wide organization. So the annual ACA Summit is coming up this next month, and it travels around, but this month it's actually going to be right here in Atlantic City, New Jersey. So we're excited to be an ACA member, excited to be attending the summit, and looking forward to having the opportunity to meet more angels and syndicate further with ACA members.
Yeah, that sounds awesome. So, Ben, I want to thank you so much for coming out here and speaking about your group. If you could mention just how someone from Rowan, if they're looking to talk further to you guys, is there anywhere they could reach you?
Yeah, absolutely. So if you're interested in talking to me personally about investment, feel free to check out my personal website, which is my full name. So BenjaminDavidNovak.com, BenjaminDavidNovak.com, I believe. For Delaware Crossing, once again, feel free to check out our website, which is DelawareCrossing.org. Or if you Google Benjamin David Novak or Delaware Crossing Investor Group, I'm sure you'll see lots of resources, ways to connect. You'll find all my contact information, LinkedIn, social, and so forth.
To recap, DCIG is an angel group based out of Warrington, PA, and Princeton, New Jersey, funding startups in the Mid-Atlantic. The group typically invests up to $250,000 per round in early-stage, high-growth businesses, as well as A and B rounds. You just heard from Benjamin Novak, angel investor at Delaware Crossing Investor Group. More information about DCIG can be found at delawarecrossing.org, or you can find more information about Ben at benjamindavidnovak.com.
Thank you for listening. Rowan is proud to be an official knowledge hub of the International Council for Small Business. Our AACSB award-winning entrepreneurship programs challenge students to solve real problems in bold and impactful ways. If you're interested in supporting entrepreneurship at Rowan or want to get more involved by hiring an intern, speaking to a class, or being featured as a case study, contact us at rcie@rowan.edu.